Ladies and gents, welcome aboard to the Captain Crypto Show. It's Tuesday night, which means it's time for our weekly Captain's Council, where we go over the latest and greatest in the world of cryptocurrency and blockchain tech. To round out the council tonight, first off to my left, we got the CEO and founder of Coinstructive, a blockchain tech consultancy company based here in San Diego, but he's also the reigning, defending, long-standing San Diego Bitcoin meetup organizer. Chris, welcome aboard.
Thanks for having me.
And Jacob, off to my right, we got our young gun coming up from south of the border. I'd say welcome, but I guess it's more like bienvenida al programa, Jacobo.
What's up, guys?
All right. So we have plenty of... make sure you talk to the microphone close. So we have plenty of stories to discuss. As usual, it's just another... how would you say it, another week of cryptocurrency craziness. But I'm actually going to start off with a little bit of an anecdote, and this one's a little bit more of a personal story, and it might be one that some of you guys can relate to. And for those of you who can't relate, it might be something where you will start to be able to relate to it relatively soon. So it's no secret on this show that I'm looking to increase the production value. Within the last month or so, we have started transitioning toward audio only to doing things with video and actually doing things live. And in order to continue to increase the production value of the show, we've had to buy equipment. We will have to buy more equipment. You know, there's a question of setting up a good set to make sure that we have a good area where we can record the show. And these are all things that they take resources, they take time, they take money, and there's a lot of effort that goes into it. So recently, I kind of had to make a sort of decision. So I call myself Captain Crypto, and you can't really call yourself Captain Crypto unless you own some cryptocurrency, right? At least a significant amount. So the question was, okay, do I want to pay for some of this new equipment, some of this new set-related items? Do I want to pay for that with my cryptocurrency, or do I want to try to find a way to pay for it with fiat? And I know the problem is that right now, in my opinion, cryptocurrency is relatively down. So it doesn't necessarily make sense for me to pull money out of my cryptocurrency because, in my opinion, that cryptocurrency is going to be going up. So the alternative really was to take a look at applying for a loan. So believe it or not, I do still have a traditional banking account. It's with Wells Fargo. So I went in and talked to them about taking out a loan. It's not a ton of money, but a significant amount. And, well, I guess for starters, they were telling me that there's different ways that you can do it. Ultimately, I decided to do a personal loan. And for the record, I have decent credit. But so I did do the application, and a week later, I get the letter back, and it says rejected. So I was a little bit surprised because my credit's been pretty good for a very long time, but there are certain factors in my lifestyle that made it less likely that I was able to actually get a loan. For starters, the amount of funds that go in and out, US dollars, funds that go in and out of my Wells Fargo checking account is really low, and that's partially because I work at Edge. I get paid in Bitcoin. I try to keep as much money in cryptocurrency as I can. Mm-hmm. And then also the current balance at any given moment is usually pretty low. Like at this point, it is really low. Mm-hmm. But again, if I think cryptocurrency is going to have good returns, then it makes sense for me not to keep money in fiat, right? To me, that's actually kind of like losing value versus something that's appreciating.
Is that really a factor that the balance you have? I mean, you weren't applying for hundreds of thousands of dollars, right? I think if it's a business, I think they might care about that. But
I think it was something that was enumerated in the list of things,
really?
Reasons. Yes, that's what I remember.
Low account balance, huh?
Yeah, that is. They look at a bunch of things. Let's see here. Yeah, so it's interesting because, okay, they're like, okay, you don't have much collateral, like I don't own a house, but also it's kind of interesting because cryptocurrency, they don't accept it as a form of like collateral. So just in general, I'm finding that my lifestyle, I'm in this kind of transition period. Maybe the industry's in a transition period because right now, if I wanted to try to get a fiat loan using cryptocurrency as collateral, I can't really do that. I know there's some businesses out there. I know Salt's trying to do it.
I've been really trying to get a loan from Salt, or just trying to use their system with the smallest amount possible, but it isn't ready.
Yeah, and they're not taking any more applicants at this point, and I know they only do it in certain states as well. So it was one of these things where it's like, okay, well, what am I supposed to do? The other thing was with Wells Fargo, they're like, oh, well, maybe you could do a business loan. Create. You have to have a
Business entity.
Yeah, you have to have business entity, but not just that. There's so much paperwork involved with creating a business, and then once you create it, they say every year you have to do some sort of registration thing.
No, and if you register in California, you got to pay this $800 thing and this and that. It's just you can definitely do it all if you're going to do a significant loan, and it can make sense, and it can end up being worth it, but yeah, it's not easy.
Yes, so I guess the takeaway, and I'm wondering what your guys' experiences are with this. I know, Jacob, you probably have a lot of experience with this. Chris, I don't know what your business, I don't know if you guys take Bitcoin or what, but we are in this transition period where we don't have the cryptocurrency doesn't quite have all the features that the traditional banking system has, but if you're even halfway into cryptocurrency, it's almost like the traditional banking system is it's pushing you out. It feels like it's pushing me out. If I can't even get loans through the traditional banking system, there's a part of me that's wondering, okay, well, what's really left with that traditional banking industry?
Well, you got a behemoth that you're working with in Wells Fargo, who's already had a standoffish opinion towards crypto, anything related. So
although this isn't crypto related, right? It's just a straight
all they
up
have
loan.
to do is look into your background and
Do you think they're really blacklisting people? Wells Fargo?
I wouldn't say that they're blacklisting people, but they're probably blacklisting people. I don't know. I mean, they have to have a risk tolerance profile somewhere in there, and they probably, they look at the company that he works for, and they say, oh, this Kylan guy, even though he's got good credit, doesn't have enough to liquidate that we can get access to.
Right.
That's the whole thing. Is the loan is they need to have the power to liquidate over. What I also want to get back to is the two other things that you brought up was the business needs to have its own credit rating, and I'm having the same issue with Coinstructive because it's been around for 3 years now, and I've been running everything basically through a bank account, but not really getting credit. Building a credit profile
for the business.
Yeah,
that's the thing too.
It's an S corp, so it's getting all of its benefits.
Inherit it from the personal.
It you would think, but it doesn't.
Most banks I've seen, they want it to be personally underwritten, anyways, right?
Well, have you heard of Dun & Bradstreet?
No.
So they're a corporate credit ranking company, right? So I applied for a credit card with the EIN of Coinstructive, and what they decided, the company who I was applying for the credit card with rejected it. Didn't give me a reason, and then I get a call from Dun & Bradstreet who've been like, people are trying to look up your company, and the only thing we have in here is that you've got $700 worth of things that you paid for. And I'm like, oh, I spent a lot more money than that. And they're like, well, we don't have any record of that. And then they wanted to charge me $1,500.
How do you pay for things if you don't pay for the bank account? Crypto or?
I use credit card for most of it, so I can get
your personal credit card.
No, I have a business credit card.
Oh, a different business credit card.
It's for the business. But it's through sole proprietorship.
Oh, and the Coinstructive isn't a sole proprietorship.
Right.
Gotcha.
It's an S corp, but that all funnels back through me as a person anyway. So it's really kind of it's all tied together essentially. So the credit for Coinstructive right now is actually based on Chris's credit.
Yeah.
Right. Yeah. So that's the problem. And then you got this company that says, well, we'll help you with that, but it's going to cost you $1,500 a year just to get to that. And maybe that is worth it if you can help build a credit history so that you can establish the company.
Yeah.
As opposed to but there's got to be other ways to do that. And I think that talking to maybe the local bank that I'm with and getting a credit card through them, right, as opposed to building it with Dun & Bradstreet and having to pay, but so that I can get a Wells Fargo or a Chase or a U.S. Bank or whatever, one of those types of guys to come in and say, okay, we'll give you a credit line as a business, knowing that I'm not really bringing in buckets of money and there's not a whole lot they can liquidate, right? So it's this catch-22, which puts us into the whole, why are we in the bank? What's wrong with the banking industry in the first place, right?
Yeah. Have you had any luck, or have you tried using credit unions at all?
No, I haven't. And, the other thing is, there's so many things that I can really complain about with the banking industry, but half the stuff is they want you to come in person, do this and that. It's like, honestly, my time is worth enough money where I can't be driving around, walking around, meeting with people. It's just not, I don't have time for that. That's not what I'm looking for. I want things that are lickety split. Like even with...
What about online? Like I got a loan 2 years ago online through... It literally took me like 30 minutes to fill out all the stuff online, and then they got back to me within like 2 days and yes, you're approved.
Yeah.
And I was like, that was the easiest loan I've ever got. And I mean, you see these commercials like Rocket Loan, Rocket Mortgage.
That's just starting, really.
That's the mortgage side, but you can still get a personal loan based on your credit history and some basic information that you're probably better off trying that as opposed to going to the bank.
Yeah, I think that might be a Wells Fargo thing specific a bit.
Okay, yeah. Because another thing was obviously, I'm working on getting someone to construct a set without going into too much detail. And the guy that's doing it actually has Wells Fargo. So I was like, okay, cool. I'll pay you. You have a Wells Fargo account. I'll just send you the money. And then I start sending him the money, and they're like, I'm sorry, you can only send so much money to another person who has a Wells Fargo account. I'm like, what are you talking about? Like, you know who both of us are. You have both of our social security numbers. Like, oh, you have to wait a month before you can send more than that. It's like, what? Okay, so what I have to do is I have to go walk in to Wells Fargo, write down his account number, actually take money out of mine and then put it into his because for some reason their online payment or money sending system is just, it has limitations for whatever reason.
Well, it's the thing that Wells Fargo has the responsibility, and banks have the responsibility for their customers, so they have to be really, really, preventative of stuff.
What in this case?
That sounds like a banking. That sounds like a BSA, like Bank Secrecy Act, limitation around what. Is it one of those platforms like Zelle or?
Yeah, that's exactly who it was.
I think there's just the company that they're using that's providing the interperson personal transfers.
Yeah.
Is actually subject to more stringent banking regulation than the bank itself, which means you probably can't do more than $1,000. I don't know what they were, and I don't need to know what the limits are, but there's certain tiers of and information you have to collect, and they probably just we just cut everybody off at X amount, so we don't have to.
We don't have to collect anything.
We don't have to fill out any more paperwork. We don't have to have any more man hours. You don't have to apply. But my other thing I want to get back to is you said crypto has gone down, so now is not necessarily the time that I want to use that for a loan.
Right.
But when you're looking at loan to value ratios, and if you're only getting, let's say, 50% on your loan to value ratio, so you.
What do you mean loan to value?
So
loan versus
how much you get out of that? So you have to put $100,000 to get $50,000 with 50%.
Right. So if you buy a house, you're gonna get.
if it's a house,
you're gonna get 80% usually. They want you to come in with 20%.
Right.
Right down. So when you go into these loans with your collateral, they need to have a plus or minus window of what the actual value is in case it moves.
Drops, yeah.
Right?
Of the stuff that I'm using the money on.
Yeah, so if you put up, let's say you put up.
I don't know if they're going to want a podcast set.
Does anyone know the average
liquid
for salts? The loan to value ratio for salt?
It used to be 50%, right? I don't know what it's at now.
Yeah, I don't know either. But my thought is if you're going to actually use crypto as collateral to take a fiat loan against, this would actually be a good time to do it, especially if you think it's going to go up, because your risk of it going the other way is reduced, which means you won't have to either put more crypto in to cover, or you won't get liquidated.
Right.
And if you you have a smaller amount that you'd loan.
But where do I
against,
do
so
that? If I can't do salt, then where else?
I don't have an answer for
that. What I was thinking of doing that.
I know a guy.
What I was thinking of doing that might
is his name Jacob?
I was thinking one way that you might be able to get around it is by playing around with the sort of the leveraging options on exchanges. So I was thinking, if you had I don't know, to make the number simple, if you had 10 Bitcoin, $100,000 of Bitcoin or something like that, and you put it on the exchange, you could sell a portion and go long on the rest on the exchange. And so you'd have the same exposure, and you'd also be able to cash out a bit of that in fiat. But you would get exposed to capital gains tax for the amount you got.
So would that have to be? Would that have to be on a fiat to crypto exchange, or couldn't be a crypto to crypto exchange, could it?
Yeah, I think so. Yeah, I think you'd be able to. You wouldn't. Yeah, you don't actually. So you're not selling. You're not withdrawing fiat from the exchange. You're just maintaining a long position.
Okay.
Yeah, it's so ugly, but you can totally do it. You can just walk through it, make sure you do it right, and do that.
I'd love to see you map out some of these ideas just so we could
I think it's
bring
possible.
them to a lawyer.
I think it's
I would
possible.
love to
He thinks it's possible. All right.
I'm pretty sure it's possible. Yeah.
I want a whiteboard and I want a lawyer. And they're like, no, not this.
Well,
it shouldn't be legally weird. It's just financially weird. It's just a financial moving hot
trying to
plate
do the
thing.
calculations while we're on air is
because
probably not,
basically you want dollar liquidity, and then you also want to exchange. You also want to maintain a exposure position on your crypto. You can do that with, and you need a 50%. So you would need a 2-to-1, margin.
I'm just saying,
Yeah.
it sounds like it gets very
It's not too complicated. It's like 4 transactions.
All right,
They
so
just
let's
have to be in
move
sync.
on. I think Chris has a story for us about money laundering. No, we're moving on. We're moving